So hi everyone. Once again, this is Noah Moluabi. Welcome to our Money Labs. Once again, this is the forum where we educate ourselves on what to do, how to use our money for the purposes of building our own wealth and living a good life, particularly as we get older, or to provide for our families. Today we are discussing how to remove the middlemen. What can you do to remove the middlemen from the distribution center of your money? Isn't that wonderful? Removing the middlemen from the distribution center of your money, so that your money, is your money and you can take charge of how your money grows and develops. That is essentially what we'll discuss in this very short presentation, with each other. You see, one thing is certain: change is inevitable. Everybody says that. But what does it mean? How is it going on? Like it or not, one middleman that we must understand is inflationary rate. The rate of inflation in whatever economy, wherever scope, wherever we find ourselves. If nothing else, you must understand how inflation, the rate of inflation, happens to be a middleman between your wealth, your future, your wealth, and the management of your money. So our world is changing in very many other ways. At least, even if you don't understand inflation, you understand the climate. Things like that. Things are changing, and they affect the personal, financial indices of our world, and definitely of our individuals. You see, so. What I'm trying to say is the world is changing in unpredictable ways, to the extent that we have to be prepared, to challenge and move, along with what is going on. So, and how do you prepare yourself? What do you need to do? So those are the things we are laying the foundations for in this particular discussion today. One thing is clear: we all have about 40 years of active physical activity. I keep saying that on this program. You have those 40 years, and that's about it. However strong, however blessed you are physically, by the time you start work, say 25, by the time you're 70, you start at 20, by the time you're 65, the energy is no more there, you can't play that golf, So by 65, we naturally, all of us, begin to look at retirement very seriously. Unfortunately, that may not be the best time to start, okay? The problem there, really, another problem, let me put it this way, another problem that is facing our world, the financial indices are changing, is that there is limited capital for the companies to play with anymore. They have limited capital to play with. So all those fringe benefits, all those benefits on retirement and pension that they used to give and compete with government, those things are disappearing even from the biggest of companies. Now they want you to match your retirement savings or whatever they are offering you. They want you to put something in there for yourself to make sure that you are growing, or you're able to settle or take care of yourself later in life. So because they are having challenges of capital, they are cutting off all the benefits, all those leave allowances, all those time off, things like that. So they are restructuring and capturing all of that. But like it or not, time keeps moving. You are moving towards your 65 years. Whatever goes on, whichever contracts they had with you. So even as they moderate those efforts. So where am I getting at? The image of the future, shows like a compromised tripod. Particularly, let me use the American example once again, because that's easier for me. But I know in other countries they have other names they call these particular programs. If where you have them, like I talked of pensions and gratuity, we all know that. We all know what pensions are. Pensions are your monthly income, your payments they pay you once you retire. Most people who work for government in most countries still have those. They give you a lump sum, your gratuity, the day you are going, and then they start giving you some little thing month by month. Even that we know is a challenge, to people right now. Companies are not doing very well in that area anymore. They are not doing that with their retirement packages anymore. And once old contracts are out, those ones just go away with the people that they had those earlier contracts. The newer, younger ones coming in don't enjoy those kind of benefits until they probably get to level of executive director and into the director's suits. But that's another talk for another day. So, but that is one leg of your future and one leg of your source of wealth, the benefits from the company or company retirement, provisions that you have. Another leg for people like us in the US is the Social Security income that comes with, with your, to you every month if you attain the retirement age, so you have social security benefits based on the savings and your contributions that you've made while working. Okay, so that's another leg. Okay, the third leg of that tripod is your personal savings. The things you have put together by yourself in terms of investment, in terms of stock exchange, savings in bank accounts, life insurance for those who have, who are wise enough to take that. All of those things come together to, from your personal effort, apart from everything else from government or social security and what your company, the things you've put together, your private properties, your houses, your cars, all those things. That's another leg of the tripod that determines your wealth status, by the time you are retiring at that age of 65. So, so those are compromised to the extent that Social Security, like in the US, is winding up even. So even the money that we think is with the government that is being made, that is being provided for you to use when you retire, there are so many freezes going on, so many challenges going on that it's many things. Everybody is on fear. We are not sure how things will go in the future. There are compromises even to that particular investment apparatus. Then, the retirement crisis, somebody called it a retirement curse the other day, I don't know, but we all want to grow old and we will grow old. Unfortunately, we are growing older than what even the retirement Social Security plan for us, than what we expected. People used to die off at the age of 47. So when they chose the age of 65 as your minimum cutoff point for retirement, they were thinking that, okay, maximum you do 72. But now people are scaling 87. They are scaling 90 easily. Okay? We saw the 100-year-old man running the marathon the other day. That tells you the way medicine and technology has helped us to move forward, to move on in life. So we are living longer than what they planned for us, the government planned for us, or companies planned for us. So, but inevitably, whether you like it or not, at 65, between 65 and 70, you must be thinking seriously, of when you are going to retire. And by that age, all those jumping around the golf course and jogging around the place, you become less active in the gyms and all of that. It shows. That brings with it its own challenges of finances. In addition to the challenge of that tripod is the education crisis, the loans, school loans, student loans. Student loans that you hope when you graduate you get a good job and you'll be able to pay it. What is happening is that people are graduating and they're not, the kind of jobs they are getting don't match up with the kind of money they need to pay. And if anybody has been following some of the political issues, challenges of our time in the US in this summer of 2022, what you notice straight away, one of the main topical issues of argument is student loans. The inability of many people to pay back those loans. So all of that, the retirement problem, student loans are, challenging those legs of those traditional legs for retirement, and they are creating obstacles for you to realize the wealth that you struggled or you thought you were struggling to put together. Then there is something I call the spending crisis. You see, essentially, there is a money problem even in the wealthiest country in the world, okay, the US. Debt becomes a way of life. All of these things add up to make debt a way of life. And, you've heard of credit cards and all the loans and all the inducements that the big retailers, induce you with this card, that card. And, before you know it, everything you are living on is credit. Your shoe, like my pastor used to say, even your shoe is on credit. Even your coffee is on credit. So there is a money problem created by too much spending. Okay, too much spending and less savings. Okay, so our situation has created a lot of people who have very poor knowledge of their personal finance management. They don't understand how to manage their finances. I'm not talking about disciplining yourself to save. No, understanding how to manage your finances so that you are not just a passive saver, but you transform from an active spender, just spending because, you need, it appears as if I need this, just spend it. Active spenders, and passive savers. So you need to transform into active savers and passive spenders. And all of this is just a basic, all you require is to understand the basic information, the facts out there, for you to use to manipulate, to change the situation and turn it around. Like I keep saying, most of this information is actually available on those websites of those banks. I don't know if they are required or requirement of government regulation, or they're just being socially responsible citizens, but you have on practically every bank website that I know, personal financial management information, education. You could spend hours and hours watching the slides and tapes and education and the facts that you need to actually manage your finances, are presented in those sections on their blogs and what have you on their websites. So essentially, you have this knowledge available, but we don't. We have not. Many of us don't use it. We don't understand it. We don't appreciate it. We don't use it. We are too concentrated on working and paying off debt and getting tired. So in these short videos, my mission really is to motivate you to begin to think actively on how you can turn things around from being an active spender and a passive saver to an active saver and a passive spender, to motivate you and to educate you and to actually empower you, because to empower you to take charge of your own wealth and your future. What do I need? What must I do? So it is my intention to actually show you what the middlemen are, who the middlemen are with your finances, and also how do you take charge, of those middlemen that at this point in time hold firm to your distribution control center. Your money comes out, you've worked for it, you paid, you're giving your check. Who is taking it from you? Who is taking care of it from you? For you. These are the issues that we want to, discuss, and we will be discussing in this forum. So follow our line of thinking and, try to understand what you can activate today. Look at it again in about 5 years and see what, has it benefited you. Better still, talk to a financial advisor. Let somebody help you, throw light into what is going on and how you can change things. For instance, if you were to have an excellent credit and to apply for a credit card today, the best you can get is a 13.3% interest rate on your credit card. That's your best offer, on your credit card. If you put your money into a savings account, the best savings account is paying you about 0.5% interest rate per annum. 0.5% interest rate per annum. So you have about 12%, you have more than 12% gap in there. What is happening? Is it all of that administration fees? And that's what I'm talking about. Excellent credit. You are paying your debt on time. You're paying this. Which means you actually have some money in your savings account as well. When we factor how to make a credit rating, what's in that gap between 13.3 and 0.5%? What can you do about that gap? To narrow it and to make it, work for you, to make money work for you. And, to prepare yourself for that time when you will not be strong enough to go. In the other show, in the other video, I talked about, how somebody who is earning $13 an hour can turn that into 2.1 million by the time they are ready to retire in today's money. 2.1 million in today's money. So if you look at yourself and say, what can I do with 2.1 million every year till I die? 2.1 million every year coming to my account till I die. How can I prepare myself for that? These are the things. This is where the strength of financial advisors come in, and why you should talk to one carefully. The only reliable leg of your personal savings, even that requires management. Don't just assume that you have a 401k or 403b and everything is great. Even those have to be managed to bring you yields that's above inflation rate. That's above inflation rate. Your credit history has to be, taken care of to give you, like I just talked about, excellent credit. All of that requires some help of an advisor. Find an advisor, talk to an advisor, let them help you reprogram your finances. At the same time, what questions do you really want to ask the advisor? That's why you need to actually, join us in this, subscribe, and help us to share it if it's been beneficial to you. Help us to share it as much as you can, but subscribe, and follow on this. We are going to talk about the wealth formula, how to turn your small money into some big money. This is not a get rich quick. It takes years of planning and years of thinking. You just heard me talk about 5 years of, what changes did you started applying? How did they, what transformations do you expect to see in 5 years, and how will they transform in 5 years? Things like that. So it's not like 7 quick steps to make this or so hit just some jackpot. No, that is not what we are talking about here. This is education for you to take charge of your money. What's an investment? What's the emergency fund? How do you manage your debt? How do you protect your money, the little that you have, the money that you have? How do you protect it? These are the kind of things we'll be talking about here, and we will expose the middlemen between that check you are getting every week or every 2 weeks or every month, between that check and a sound financial future, which is wealth, when you don't have to worry anymore about money. How do you take charge of it? How do you take charge of that, take control of the interest rates? How do you take control of inflation rates? How do you take control of the time that you have between now and retirement? You may be 50, for instance, you still got 15 years. Why are those rates the banks send to me? Why are they different from each other? What can I do to move these things around? So those are the things we continue to expose on this program. Thank you once again. I hope you've enjoyed this short introduction. Please go ahead, look at the other videos more are coming in to help you understand how to manage your money and take out the middlemen. Thank you. My name once again is Noah Moluabi. See you.